Okay, let's get the briefing underway then. Tuesday the 7th of February. Looking at the charts this morning, obviously you've got a cross section of different asset classes you can see here as usual, and the thing that sticks out the most is dollar strength this morning. Dollar index trading up around 0.7%, so both pairs have been under some pressure this morning. We'll look at those technically in a second. Not really a great deal of new news to fuel that move. There has been a Fed speaker overnight, Fed's Harker, reiterating Williams's comments from last week by saying that March is on the table for a possible Fed rate hike. Not sure whether the market really believes that, because if you go off fixed income futures in the short end, certainly the next rate hike from the Fed's not priced in till well into the summer. And if you were to look at non-farm payrolls on Friday, then certainly that kind of suggests that that's the course in which the Fed will probably continue this gradual, cautious manner of rate normalization. March looks highly unlikely, I feel, at this point, and June looks more viable. But obviously this is when you get the variance of the board and their hawkish, dovish views. So probably Harker just looking to kind of rebalance the needle slightly so the market doesn't get too dovishly priced. So not too unsurprising to hear that comment. I don't think that's really what's caused the dollar strength, if anything. Just having a look technically though on these currency charts, there are quite a few levels of interest that I think which has contributed to some of this aggressiveness of the move this morning. Firstly, if we look at cable, the level of significance that we're looking at here is one we were looking at only a few days ago, and it was, let me just highlight it. So really it was these 2 points. It was that was the day when you had the higher than expected UK inflation readings, you can see here on the left, and Theresa May's Brexit, when she outlined those 12 kind of key areas of what Brexit was, providing some clarity. The markets liked it. It was one of the biggest intraday rallies in the pound, I think, in 8 years on that day. That was the point in which we hit around those highs at 24.30. Then a few days later, we broke above there, but came back down to test that exact level. What was resistance acted as support before then another move up to the 127 handle. We then, just last week, on the 31st, we came back down to test that again, before then rallying back to the 27 handle. And then yesterday afternoon, we got to that level again, tested it, and it bounced again. So very significant level there in cable. You can see I've just kind of highlighted it on 4 occasions where it's provided resistance or support, and we broke that this morning. With the dollar strength, I think this has exacerbated some of the move to the downside and meant that that's been a lot more aggressive in cable, for instance, than in euro. Now, if we just flick over to the euro chart, you'll see what I mean. I mean, we're down a point at the moment in cable. We're down pretty heavy as well in euro dollar, but there was that level we were just looking at this morning before the briefing, kind of that cluster of support that was seen around the 26th, 27th. We got down to that, we broke that low around the 107 handle, moved lower, and that's pretty much right in step with the S2 on the day as well, with the daily pivots. We've just had a bit of a hiatus to the move here, a bit of a bounce. So a lot of this, I think, just being technically driven. That euro level looked pretty good to negate that, but cable, it looks a bit more severe, just given the breakdown of that key level for the first time on really 3 attempts that you've had over the last, well, 10 days or so. Let me just move this back out and we can look at elsewhere in the equity market. Actually pretty subdued. We're just minor negative in the DAX future. The S&P is really doing nothing at this point. Upside just being contained by pivot. Looking at the cash markets with half an hour of trade underway, the FTSE's broadly positive, up around 0.25%. The AEX up 1/10, SMI flat, the DAX is flat. So nothing really too great to speak of there. Gold's also flat, so it's given back some of the gains that we're seeing overnight. likely in part just pressured down with some of the dollar strength. And then elsewhere in bunds and T-notes this morning, bunds continue to edge up, outperforming somewhat. We're up 33 ticks in the bund comparative to the 10-year, which is pretty flat really on the 125 handle. Obviously a pretty good move yesterday we saw during the afternoon. A lot of focus on France. We're going to talk about that a bit more shortly. And then also we did have some data out of Germany this morning, just to be aware of, although it's not really influenced the equity market too much. You did have German industrial production this morning enduring its worst month since January of 2009. You can see here my chart that I'm showing with you at the moment, the contraction of industrial production in Germany. But it's quite, you'd have to go all the way back really to the sweet spot of the financial crisis, if I can call it that. That was when we had a worst print, really. It was down, you're looking at contractions of nearly 7%. So even through the sovereign crisis, throughout 2010 through 2013, that period, this is the worst reading we've had since then. Don't forget, people often refer to Germany being the kind of bellwether of Europe, the kind of engine room, if you like, and industrial production having a significantly bad run at the moment, defying analyst forecasts, which were actually looking for growth today, going off what the FT is saying. But again, the worst performance that reading seen since the financial crisis. Again, it's not having too much of a read across on, I guess, a broader sentiment, because, as I said, equities, if anything, since the cash open futures have been rising, and gold's kind of just paying more attention to the strength in the dollar to pressure that lower rather than a classic flight to quality. Okay, a few other news items just to get you up to speed on. Don't want to dwell too much on the earnings front. You've had BP, one of the biggest companies in the UK, report this morning. Profit misses estimates on oil's rally hurts refining. A pattern really that's emerged across the industry, that's reinforced by BP's results. Basically, profits from oil and gas production are rising with higher crude prices, but are being offset by weaker than expected earnings from refining and trading. So as I said, in the cash market, the FTSE is actually positive, despite some negative movement in BP, which opened down around 2% this morning. Likelihood is that to a certain degree, just given that phrase that I just said, is that these results of this kind of manner, if you like, of profits benefiting from higher crude prices but offset, if you like, from refining and trading, it's kind of been a pattern we've become accustomed to now for that particular sector. The other one is BNP this morning. That's probably one of the other more recognizable names. With their earnings report, they posted a net that missed estimates, and they plan cost cuts. Again, I guess it's pretty much reflective of that current state of affairs in terms of the French banks in particular. So their fourth quarter profit missed estimates as earnings fell at the French consumer banking business. The lender also laid out multi-year plan to lower costs and boost investment in technology. But not really too much focus on these at this present point in time. As I say, what was quite interesting yesterday was that with some of the correlations, you kind of got a bit of a move back towards on Friday. If you remember the way that US assets were reacting to the overall weaker jobs report, because let's remember, if you X out the headline reading, the rest of the report was generally quite weak, or perceived to be that, particularly on the wage growth front. And we saw equities and T-notes rise. But what you had yesterday was the reverse of that. It was kind of more of a classic flight to quality bid in assets in the wake of what is a bit of a an uptick in fragile sentiment, let's call it, over the European political situation, with France kind of grabbing a lot of the headlines given Le Pen's and various other candidates' election campaigns we had underway at the weekend. But what you're getting at the moment, this morning, is dollar strength. Maybe that's just a bit of a byproduct as well of a bit of a divergence fundamentally between the UK, where economic data in general is starting to show a bit of weakness, going forward into what will be politically a period of uncertainty, with the triggering of Article 50 still at this point set for the end of March. And then in Europe, you've kind of got this political situation unfolding. And although people are watching inflation, there's certainly more than just France. There's the Netherlands and Italy to also be mindful of as well. And we've been seeing those bond yield spreads widening again. So maybe this is just a bit of a, despite nervousness over Trump, fact of the matter, US economy still performing fairly well at this point in comparison to the situations elsewhere, driving a bit of divergence in the currency play. Looking at a couple of macro things then, as I just said, the European political scene has kind of picked up pace with France yesterday. A couple of interesting things actually. I did a bit of research last night about this French situation and Le Pen, but first and foremost, I think a lot of people have been focusing on that and really not spoken too much about the Dutch situation, which actually comes up first. 15th of March, you've got the Dutch elections, and this is where there's a far-right Eurosceptic PVV is leading the polls. The incumbent PM's party, the VVD, is second. Mainstream parties, they've ruled out any coalition with the far-right party, but it's expected, this is Deutsche Bank's view, that multi-party coalition government, that of course will go through a lot of difficulties in trying to form that type of coalition, given the far-right nature of the PVV themselves. So likely to go into a period of political uncertainty there, and through lengthy talks in order to get their house in order, so to speak. I think the Dutch one certainly has grabbed certainly a lot less attention than the French one, and likes of Renzi previously, but that's not to be discounted, and that's another definite swing we could see with this kind of populist phenomenon that started obviously with Brexit, Trump, and so on and so forth. So that's one to keep an eye on. The Brexit one, I don't want to dwell on that too much, but obviously that's still underway. It's Wednesday night where we'll be getting the vote in regards to just the confirmation of triggering Article 50. Theresa May yesterday defending the various amendments that was brought forward on her 138 worded bill, if you like, brought last week about triggering Article 50. And then you move on to France. Now, an interesting headline, saw a lot of this, I guess, heading into Brexit, about bank calls on how the pound might move. And actually, in the event of a Brexit, although it wasn't expected, most banks did think that sterling could fall around 10%, and they weren't really far off with those calls. And you had JP Morgan talking yesterday. They've basically issued a note on Friday saying that the euro could slide 10% on a Le Pen victory. They're saying the euro could fall swiftly below parity with the dollar, and France's borrowing costs soar to 2% more than the German equivalent if the far-right leader, Marine Le Pen, won the French presidency in May. Again, they're not saying that is their baseline scenario, her winning. Pretty much every bank on Wall Street, and I think every bank, is thinking that she'll fall short in the second round. But given then that broader expectation, all the more severe the reaction would be then in the scenario of which she then wins. Now, I have no doubt that up until that point, I would continue to expect further nervousness around that situation, and especially the knee-jerk reaction you would assume would be a negative one, given a lot of the pledges that we've heard from Le Pen just at the weekend about immigration, and more interestingly, looking to potentially call an EU referendum, move away from the European currency, and so on. Now, if you remember, a lot of people were caught the wrong side of a Trump reaction, if you like. The classic thing you thought would be equities would dump, gold would go through the roof because he's Donald Trump. I mean, it doesn't really require much more explanation than that, I guess. But actually the reverse happened after a very short-termist type reaction, which was the kind of what we just explained, even on the night of the election, we pretty much reversed most of that, as people, as we now know in hindsight, focused on more the fiscal element that he could do to boost the economy, and then this whole Trumpflation and the Trump trade that's been apparent really since November. Now, doing some research, I read some interesting things from Credit Suisse last night, and I think actually when I hear things like Le Pen talking about leaving the EU and things of that nature, when you actually drill down in the nitty-gritties of constitutional law in France, you look at the actual composition of Parliament in France, I think leaving the EU is highly unlikely. I think this is more political ploy. You're trying to just cajole the voting public to get them on side, something which obviously worked perfectly for Donald Trump by having such quite far-reaching views and opinions, certainly captured a large part of what we could call middle America, and definitely Le Pen is positioning herself in a very similar manner. It's not make America great again, it's make France free again, is the kind of slogan that's being coined. And a couple of things here that are interesting. So you can see here on this chart on the left, this is the current composition of Parliament in France. You can see here the National Front currently hold just 2 seats. So that's 2. And, while she's now looking to, there's a huge amount of, obviously, popularity that she's managed to get. And expectations are there will be a significant increase for the National Front. They're expected to get up to between 58 and 64 seats, the National Front. Now, let's not forget the Socialist Party currently have 289 seats. The Republicans currently have 198 seats. So you're talking nearly 500 seats already between the 2 major political parties. The rest is kind of the crumbs at the table, if you like, with the other tables or the other political parties. Now, if she gets up to 58 to 64 seats, as has been predicted, that's a significant increase from 2, obviously. But what it would mean is that in a hypothetical scenario that Marine Le Pen wins the presidential elections, she would have very limited powers, because without parliamentary majority, Le Pen would have to form a coalition government. It's otherwise known as what they call a cohabitation. She would have to choose a prime minister from the majority party, which is, as we know, most likely going to be centre-right one. So let's say Fillon's party. So then she would have to share her powers with Fillon, and actually he would carry, and his party, the majority seat, and anything Le Pen would want to do, which includes calling for an EU referendum, would basically, you'd have to have him also ratify it. Now, interesting in this box then, this is by Credit Suisse, it kind of sums it up. In the case of then a cohabitation, the president loses part of, let's say, her powers in Marine Le Pen to the prime minister. This is a list of reduced powers the president would have under a coalition government. So essentially, she cannot choose cabinet members apart from Defence and Foreign Affairs Department. The president cannot dismiss the prime minister, only Parliament can. No laws can be implemented without the agreement of the prime minister. Le Pen, in this scenario, can still dissolve the Parliament, but only 1 year after the elections. She signs laws and decrees and can nominate civil servants and soldiers of the state. She can initiate referendums, but only if the proposition comes from the Prime Minister or either one of the 2 chambers. There's also a lot of other nitty-gritty details about actually going through the process of you'd have to essentially go through a constitutional change in order to enact on a Frexit, they're calling it at the moment. So what I'm saying is that actually, even if Le Pen wins here, let's say, again, this is very far-reaching because she is a distant second to Fillon or Macron if it were the case that those 2 then go through in the final runoff. But if even the surprise happened and she wins, I actually think that it's not as big a deal as maybe the press are making it out to be at this moment, because her hands would be largely tied quite tightly, and everything that she would do would have to be kind of ratified on various levels, and she could get basically any view or order she pushes through could get basically vetoed. Now it's kind of like looking at Theresa May in the situation she's going through. However, looking at it, I'm just doing some reading last night, it seems Theresa May's got it easy compared to what Le Pen would have in the French setup politically, on how their the kind of composition of their parliament and the powers, and who has the say on what exactly. So again, maybe just something to keep in mind. I'm a little bit less, having read into it in more detail, doom and gloom about even if Le Pen did win, of what it would actually mean for the economy. I think that it could be, of course, a knee-jerk reaction. What I'm saying is that you could be in for a bit of a Trump situation, where actually once all the fanfare dies down, people get over it, and actually there's not a lot she can do. Anyhow, just going back to the charts, just having a quick look. The DAX continuing to pull back now into positive territory. So after a lot of these initial moves this morning, the dollar's backed off slightly. So we've had a bit of a we found a bit of a flaw in this currency fall this morning in both pairs. Equities starting to recover, so another test at pivot in the S&P. Quickly then, just a quick run through on the calendar. You did have the RBA interest rate decision overnight. No surprises there to really bring you. They basically kept rates unchanged at 1.5%. They signalled the cutting cycle may be over. They said they expected the economy down under would grow around 3% annually for the next couple of years, and inflation would pick up above its 2% target over the course of the year. Otherwise, for the morning, it's fairly quiet. There is not a lot going on. So again, I'd be kind of trading accordingly. Maybe looking technically for levels to be more at the fore, as was the case yesterday with a particularly light calendar. Even going into the US afternoons, it's a similar situation. You've got job openings and IBD tips, which are really lower down the pecking order in terms of important economic data coming out of the US. API crude oil inventories, of course, will come after market. You did have Genscape yesterday, just to bring you up to speed if you weren't aware. The Genscape Cushing number was a build of just over 1 million. So if you don't already follow this chap on Twitter, if you look at energy, if you look at crude oil specifically, then I strongly suggest you follow this chap, Lee Sachs. That's his handle, Lee_Sachs. He breaks oil headlines pretty quickly, and he's got his finger on the pulse. As far as I understand, he's just a commodities trader in the States. Otherwise, you got ECB's Weidman speaks about the prospects for the economy, so that could be quite an interesting one. Obviously, most leaning hawkish member on the ECB Council. He'll be speaking just after the European close. That might be a late one to just keep an eye on as well. Okay, guys, going to leave it at that. Coming up to 9 o'clock then. Enjoy the session. I'll see you in the chat room. Thank you.